Today you're watching Businessworld Live. I'm Danie, Laurel.
Somebody's way too eager for Christmas. I'm Delos Santos. Here are today's top stories. The Marcos administration plans to borrow $600 million from the World Bank to help the economy recover further from the pandemic and to improve climate resilience and fiscal management.
The Bangko Sentral launches its 11-point sustainability agenda as Governor Felipe Medalla calls for action against climate change.
PLDT says it will cut back on spending next year following the discovery of a 48 billion peso budget overrun.
And Metro Pacific partners with an Israel-based company to build and operate a 20-hectare farm in Laguna to boost the production of fresh milk here in the country. Let's begin our broadcast with the government seeking a loan worth $600 million from the World Bank. Now, a document uploaded on the multilateral lenders website says the Philippines' first Sustainable Recovery Development Policy Loan, or DPL, is expected to be approved by the World Bank in May of 2023. The DPL aims to support the government's reforms to accelerate economic recovery, protect the environment, and improve climate resilience and fiscal management. The funding series is expected to boost investments in renewable energy, shipping service infrastructure, and public-private partnerships.
An executive of the Development Bank of the Philippines says the proposed Maharlika Investment Fund will help address the country's issues in sourcing long-term or improving fiscal management. DBP President and CEO Emmanuel Herboso said the Maharlika Fund is important to broaden investments in critical areas such as food, water, green energy, and telecommunications, among others. However, for non-government organizations, professionals for a progressive economy, the MIF bill suffers from a lack of transparency safeguards. The group adds that public consultations on the bill should have taken months. The House of Representatives approved on third and final reading the bill creating the MIF within just 18 days after it was filed, garnering the solid support of at least 90% of congressmen.
Now, a group of sugar producers says that while it is not against importation, it is not the solution to the soaring prices of the commodity, saying the real problem lies with the implementation of the suggested retail price.
Another agricultural group says the importation should be done on a staggered basis. Faith Del Mundo with the report.
Elisa had to raise the prices of her kakanin as prices of sugar remain high. This resulted in fewer customers and lower profits.
Yung mga paninda namin na madali lang mabili dati, ngayon hirap na. Yung isang piraso lang ng paninda namin dati, ang nabibili, dalawa, minsan isa na lang. Lalo na yung sa mga leche plan namin.
The same goes for Cristobal, who noticed fewer buyers even amid the holiday season.
Hindi masyadong madami.
Bakit, ma'am?
At saka mas mabili yung mga segunda kasi siyempre mahal yung puti eh. Yung segunda 90, 80, 85 mga ganun. Siyempre naglaylo sila sa puti dahil siyempre mahal. Hindi rin masyado sila kasi mahal nga. Yung iba siguro bumibili na lang ng paunti-unti. Kahit nga ako hindi rin ako magluluto.
White sugar now costs 95 to 100 pesos a kilo, while brown sugar is at 80 to 85 pesos a kilo. To stabilize the prices, the government will need to import 64,050 metric tons of sugar. President Bongbong Marcos has since ordered to fast-track sugar importation, but the United Sugar Producers Federation of the Philippines is opposing this. They said the problem is in the implementation of the suggested retail price. The group added that higher costs of fertilizer and oil are driving up the prices of sugar. Meanwhile, the Samahang Industriya ng Agrikultura doesn't see a problem, as long as the imported sugar arrives staggered within several months.
If the whole volume of 64,000 metric ton come in January, we have some problem because of our farmers still harvesting in first part of January.
The group added that retailing issues should be also factored in, citing the Sugar Regulatory Administration's failure to stabilize the prices through importation. For News 5, Faith Del Mundo, we are One News.
All right, before we take in all those sweets for the holiday weekend, government wants to make sure they cool down prices of sugar as they gave additional imports a go for next year. But local players are pushing back. For insights, we have AJ Montesa, Program Officer of the Action for Economic Reforms. AJ, good day. Merry Christmas.
Good morning, good day, Jess and Danie. Merry Christmas.
Okay, so we've been importing sugar. This is nothing new. We've done it especially last year. But that, I guess, raises the point that even if we try to import huge amounts of sugar, prices remain high. So is importation really the right course of action here? If it is, then why are prices still high?
Right, so when we talk about inflation that we're experiencing right now, it really is a mix of a lot of factors. So definitely we have agricultural pressures arising from a lot of international or global supply shocks as well. So for example, the Russia-Ukraine conflict has been ongoing, which is why prices of many agricultural commodities remain high. We have the increasing price of fuel also, which tends to have a spillover effect on agriculture also. But I think when it comes to inflation, what we're seeing is that reducing the tariff rates is just a stopgap measure. The fact that we've been reliant on high tariff rates to buoy our agricultural sector is it's sort of a symptom of a larger problem, that we haven't been able to invest properly or develop our agricultural sector enough in a sustainable way that we can have a resilient agricultural production, right? So I think the tariffs are just a way for us to meet the inflation that's rising right now. But if we're talking about long-term solutions, I think the administration has to be more direct in its approach in addressing agricultural woes, right? So right now, currently, I think the Department of Agriculture is suffering from the fact that it doesn't have a secretary. I think the President Marcos has himself assumed the position of Secretary of Agriculture. However, I think the President definitely is busy with a lot of other things overseeing the entire country. So it would be more helpful if we have a dedicated Agriculture Secretary to address these problems. And then this Agriculture Secretary could address the long-term problems and develop a long-term roadmap for developing our agriculture sector.
Okay, I'll get back to you on the lowering of the import tariffs, no? But I just wanted to press on one question. Is there a lack of sugar supply? Is there a real shortage that warrants importation in the first place?
Yes, I don't think that the Philippines is producing enough sugar to be self-sufficient, that in the case that production would meet our consumption needs. No? So I think even without tariffs or even without the lower tariffs, the Philippines should not expect to be producing as much sugar as it consumes. No? So I think it's only natural that we would have a degree of imports. And I think that goes for most of our agricultural products. We shouldn't politicize importation. Importation is not necessarily bad. I think the problem has really been with, ever since the 1990s, we've been relying on high tariff rates to sort of insulate our local industries. And every time that we have inflationary episodes, that's when we resort to lowering the tariffs. So if we're going to try to use this strategy, it's going to arise during inflationary episodes. But if we really want to address the core issue, we should stop relying on high tariffs and instead invest in our agriculture sector, so that when the time comes, we won't have a huge dependence on imports. For example, we will have our own local production, and at the same time, we won't be having to renew lower tariff rates every time.
Okay, but is there any benefit whatsoever for this extension of lowering of tariffs for 1 year? What benefit would this give? We also had Sinag saying that it's just the importers that really benefit. Our government is going to lose revenues. And like you said, it can't be a permanent solution towards a more systemic agricultural problem.
Right. So the most short-term benefit definitely is the lowering of prices. So we can expect that as we import more, prices would stabilize. And I think the NEDA and the DA have stated that the short-term tariff reductions are really for stabilization purposes. But by reducing the tariffs, we're actually exposing these long-term problems, and we're starting to see that we should stop being as reliant on tariffs. So I think if this is the impetus for us to push more sustainable agricultural policy, I think that's good. A second thing, a good point that you did point out is the fact that probably the people who would benefit from the lower tariffs are the importers and traders, right? So I think that's where government can come in to sort of enforce our laws on enhancing competitiveness. We should enforce antitrust laws and break any cartels that are existing or that are in place that artificially raise the price. So if these inflationary episodes are sort of the impetus that would push the government to pursue these kinds of reforms, I think these are what the long-term benefits could be.
Okay, you yourself mentioned earlier that importation is not necessarily bad. So given that, how do you think should government balance or at least calibrate this whole importation policy so that on one hand they get to do some better price control, at the same time protect local players? And earlier you mentioned direct investments in the agriculture sector. What direct investments are you talking about here so that at least we get to better support our local players?
Right, so I think the most important investment that we need to make in our agriculture sector is really to improve the productivity of our local farmers, our domestic farmers. Our agriculture policy so far has been to rely on tariffs to sort of protect these local farmers, to make them competitive. But in the long run, it doesn't make them any more competitive. It doesn't make them any more advanced technologically, for example. So providing them with the skills, with the technology, with the infrastructure, for example, to become more productive, to be more efficient, giving them the opportunity to find crops that would give them the higher standard of living, and increasing their links inside the value chain. So farmers shouldn't stop at just producing the raw materials or the raw ingredients, but they should be able to scale that up. For example, they should be able to, for example, join cooperatives that produce higher value products out of these raw agricultural products. So I think there's a lot that can be unpacked there that the government can pursue in terms of our industrial policy. When I say that we don't necessarily have to demonize importation, for example, that just means that we don't have to completely rely on our own production to sustain our consumption, right? We can rely on, for example, excess surplus in other commodities. We can trade in those areas, and then the surpluses that we gain from those commodities is what we can use to spend on our importation. And that's really the model that other countries have been using.
Okay, now AJ, you mentioned earlier that the benefit of importation, at least in the short term, is the stabilization or lowering of prices. When are we going to be feeling this, and for which products? Are you seeing that, that dramatically improve by the first quarter of next year? To what extent are we waiting? What are we waiting for to see better prices in the market?
Right. So I think I talked about not necessarily importation as a whole, but the specific extension of the tariff rate reductions, especially in corn, I think pork, for example, and in coal. So the reason that the government or President Marcos has agreed to extend these tariff rates, which was supposed to end by this year, I think they've decided to extend it for another year, is because we're seeing really huge inflation spikes in these areas. For example, in sugar, it's 38% inflation in November. Corn was 27% and meat is 8.6%, right? So definitely we're starting to feel the impact. It's hard to say when the inflationary impact will tame down, because a lot of these really depend on supply shocks. So for example, for pork, for meat, we had an episode of the swine flu, so it's really sort of unpredictable, but we can put some measures in place to make us more resilient. In sugar, we had this whole fiasco in the Department of Agriculture. So those things can be avoided with better management. And with corn, for example, again, we're seeing a huge inflationary pressures globally also. So these are the things that a lot of these things are out of our control, but we can.
Okay, we seem to be having a bit of a technical glitch here trying to connect to AJ Montesa of Action for Economic Reforms, but interesting points that he's been raising there. At least I will try to get back to him as soon as we can, if ever that's possible. But for now, let's pause for a quick break, coming right up after that. PLDT will reduce its CAPEX budget starting next year.
More of that and other stories when Businessworld Live returns. Stay with us.
You're still watching Business World live here on One News. I'm Jess Delos Santos.
And I'm Danie, Laurel.
The Bangko Sentral has launched its sustainability agenda as it seeks to mitigate climate risk by advocating green policies and practices. BSP Governor Felipe Medalla said the agenda is in line with their efforts to keep climate change from making food supply shocks worse. Medalla also said climate change affects how the BSP regulates banks, as capitalization requirements should be enough to constantly bear its risks. Under its 11-point sustainable central banking agenda, the BSP will initiate vulnerability assessment for environmental risks in the economy. The BSP will also incorporate macroeconomic effects of climate change into monetary policy as well as support financing of sustainable economic activities. The central bank also urges stakeholders to put sustainability at the core of their services.
Meralco and the Energy Regulatory Commission have separately asked the Court of Appeals to deny a halt order on a power supply deal between the power distributor and a subsidiary of San Miguel Corporation. Meralco said it formally asked the CA to deny the temporary restraining order and writ of preliminary injunction filed by San Miguel's energy unit. According to Meralco, a halt order would result in the termination of the SMEC's power supply deal with Meralco, which covers 330 megawatts of baseload supply. The ERC said the Commission and Meralco also filed separate motions to oppose the consolidation of the case. Now, according to the ERC, SMC Global Power sought to consolidate the case of San Miguel Energy after it secured a temporary restraining order against Meralco's power supply deal with South Premier Power Corporation.
PLDT will cut its capital expenditure budget beginning in 2023. PLDT President and CEO Al Panlilio said the company plans to reduce fresh CAPEX in 2023, calling it a, quote, year of consolidation. The move comes after an investigation was launched over the 48 billion peso budget overrun. Panlilio said the overspending stemmed from years of underinvestment, heightened competition, and strong demand for fiber connections during the pandemic. PLDT also attributed the bulk of the budget overrun to the procurement of network equipment necessary to provide stronger connectivity to subscribers.
Metro Pacific partners with Israel-based LR Group to operate a 20-hectare dairy farm to boost milk production in the Philippines. Currently, the country is reportedly importing 99% of its fresh milk requirement as local production fails to meet demand. To address this, Metro Pacific entered into a joint venture with LR Group to put up a dairy farm in Bae, Laguna, where 6 million liters of milk are aimed to be produced per year. Construction of the 2 billion peso farm will begin next year and it is seen to be operational by 2025 or 2026. Now, Metro Pacific says the project's concept was inspired by Papua New Guinea, which also previously used to import almost 100% of its fresh milk requirement.
It was a complete surprise to me that Papua New Guinea was like the Philippines before. They imported more than 99% of their milk, and when LR Group established the Ilimo Dairy Farm in PNG, as of today, I believe they already have about 30% of the market in terms of fresh milk. So that's going to be a significant help for the country. We are very passionate about making agriculture sexy again. For us to be able to convince the younger generation to be involved again in agriculture.
All right, let's circle back to our discussions earlier about the agriculture industry, especially in talks of importation as well as inflation with AJ Montesa, Program Officer of the Action for Economic Reforms. AJ, let's do a quick audio check and hear us.
Yes, I can hear you. Apologies for the technical difficulties.
No worries. That happens, of course. Now, earlier we were talking about inflation here. A very quick, give us a quick idea here. When do you see it peaking? At the same time, when do you see things tempering, at least in terms of price pressures?
Right, so I think we're still starting to feel the post-COVID inflationary pressures as the world global supply chains are starting to recover, as consumer demand starts to increase, that's why we're starting to see inflationary pressures. And for example, in the United States, they've been very aggressive. The U.S. Federal Reserve has been very aggressive in combating inflation expectations by raising interest rates, and we've definitely matched that in the Philippines. Our BSP has been very committed to being very aggressive towards combating inflation. Since May of this year, we've already raised our policy rates by 5 times, from 2% in May to 5.5% right now. So I think at the very least, our central bank is very aware of the inflationary pressures. I think the pressure now is on the government, the non-monetary side, to really also address these inflationary pressures as well. So I think the burden really should fall on the Department of Agriculture to address the agricultural woes in particular.
All right, now AJ, before we let you go, end of the year here, and we're still talking about that Maharlika investment fund, which might come into play or have the spotlight from early next year. Your thoughts on that? Are we ready for that at this point in time, given all of the other issues that, of course, need to be addressed?
Right. So I think a sovereign wealth fund, the concept of a sovereign wealth fund is not necessarily wrong. I think a lot of countries have shown that it can be very effective. The problem really is with applying the concept in our particular context. So sovereign wealth funds are usually born out of excess. When we have an excess supply of funds, of reserves, for example, if we have surpluses in terms of our trade or in terms of our budget balance, then we can implement or enact a sovereign wealth fund. Unfortunately, the Philippines is seeing the exact reverse right now. We do have a budget deficit, a massive budget deficit. That's why the fiscal managers have to pursue tax reforms, for example. We don't have a consistent trade surplus. We don't really have a reliable any trade sector that can give us a consistent annual trade surpluses, right? So I don't think the timing is correct. Fundamentally, we don't really have the right mix or scenario right now to implement or institute a sovereign wealth fund or a Maharlika wealth fund. Although the bill that was filed was really fast-tracked, within 18 days it was passed. And because of public pressure, the source of funds from GSIS and SSS were removed, right? So I think the legislators are starting to see that the public is not really receptive to this. Economists and other former fiscal managers have all warned of the dangers of implementing this right now. So on our end, on Action for Economic Reforms, and we completely disagree with the implementation of this sort of fund. I think if the goal of the administration is to really invest in infrastructure, for example, there are already existing ways that we can do that. There is the budget process, for example, and the government can directly source these funds from institutions, these government institutions like Land Bank and BBP, without having to enact a bill like the Maharlika Wealth Fund.
All right, very clear position paper there. Thank you so much, AJ Montesa from the Action for Economic Reforms.
Merry Christmas.
Thanks, Jess and Danie, for having me.
Merry Christmas.
Those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us.
And we're still watching Business World Live here on One News. Dan, last trading day before Christmas. You seem to be so joyful for the season.
Because if I wear the hat, Jess, maybe this will turn green.
Is that happening?
Yeah, it's not. So you can see here, quite a surprise actually, because U.S. consumer confidence was reported to have an 8-month high in December, right before the holidays. Analysts were expecting some cheer. That doesn't seem to be the case. We are ending the pre-holiday season on the back foot, we are at 6,500 levels. That's just about 0.5% down. Now let's take a quick peek at which ones are leading. Jollibee Foods, baka marami pa rin kumakain before the holiday season. Just Montesa and Pure Gold. So, you know, a lot of shopping still going on. Probably on the downside, you've got AC and GT Cap. And of course, we can't end the week without taking a look at PLDT and how that has done, down by 4 pesos today. That's 0.3%. Of course, still that saga is not yet over. It will probably be spilling over post-holiday season, as of course today there's going to be a response from PLDT to the PSE on why several things were not disclosed earlier. So still a lot of ongoing inquiries into that situation there, Jess.
All right, not much of a Grinch after all.
The Grinch of the markets. Ikaw yan eh.
No,
Ayaw mo
not
kasi
at all.
suotin yung hat.
Let's enjoy the weekend, of course. That's it for today, December 23, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for your free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
I'm Danie Laurel. Merry Christmas,
Merry
Filipinas.
Christmas.
Have a good one after 2-3 years
Finally.
at home. Magkakasama-sama tayo ulit. We are One News, all sides, all the time.